Welcome back for another top-notch video. This week, guys, we're talking about the week of August 31st through September 4th, Labor Day weekend included. As always, our top-notch channel is about TSP, Roth IRA, brokerage accounts, anything to do with the market. We do kind of a weekly overview, kind of go over the funds. If you are involved in TSP, which is the government Thrift Savings Plan, we talk about the C, S, I, and F fund. If you're in Roth 401k accounts, we talk about IVV, VXF, EFA, and AGG ETFs. These equal each other, so the C fund / IVV equals the S&P 500. The S fund or VXF equals the small caps. The I fund or EFA equals international markets. And the F fund or AGG ETF equals bonds. On this channel, we're doing extremely well. We are beating all markets for the year. We are beating the S&P 500. We are up in the positive percentage. We are above all funds for the year. We will look at that real quick. As you can see on the Top Notch channel, we are at 8.47% for the year. Our top performing fund for the year is the C fund at 7.4%. So we are a whole percent above all funds. We are outperforming the market at this time. Very excited for that. We haven't been outperforming the market for a couple months now, so this is very good. We are beating the market, as people like to say. So we're doing very well, and we'll show us the screenshot here. This is what I have total earned for TSP. As you can see, it matches the 401k TSP website. It's the same amount there. So we are making that amount, which is awesome. We are super excited to be above all funds. Please like, subscribe, or share if you're interested in learning more about TSP and about this channel. We kind of do a general weekly overview and then go kind of do some analysis and go into a technical analysis after that. Please like, subscribe, or share. Let's get right into the video. So for this week's video, guys, here's what our funds did for the week. As you can see, that C, S, and I fund were all down for the week pretty significantly. Middle of the week, things were looking really good, and then they decreased significantly during the week. Let me show you that on a chart perspective. So here it is on a chart perspective, guys, for the C, S, and I fund / our ETFs. As you can see, funds were going up towards the middle of the week. We made a move here on August 31st. It was our last move for TSP. We wanted to try and safeguard some capital. We missed out on a little bit of gain here, which we were upset about, but the problem is with TSP, we only have 2 moves per month, so this is a really good move to make this move on the 31st. And as you can see, charts were up almost 2% for that C fund, and then they just took a massive dive on the 2nd, 3rd, and 4th here. So a pretty significant dive. We're glad we moved our funds when we did. We don't know how big this correction will be. We'll do some technical analysis to kind of see how far things could go, and you guys can make your own decisions. Moving on to the charts. One of the charts we like to look at is TSP Talk. Tom does some great commentary there. Please check out his website. Here's some of the charts that he posts. On this first chart for analysis, as you can see, the 20-day moving average is built in here. Here's our moving averages all in the right direction. Longest moving average on bottom, shortest moving average on the top, which is what we like to see for a bullish chart. But as you can see, this market came all the way back down and hit the 20-day moving average. That is a positive sign. We were kind of outside our trend lines here. Here's something I don't like, though. As you can see on these charts, Tom drew in some gaps. We have a gap here, and a gap here. What gaps typically tend to do is they tend to get filled. So we could possibly see some of these gaps get filled. I could potentially see this chart come back down to hit this 50-day moving average kind of as a final breaker here. But we did touch this line and moved right back up there, so that is a positive thing there. But overall, I'm not liking these gaps for the S&P 500 or the C fund. And as you can see, our PMO line, which they draw in here, is starting to head back down to the red line. Usually when it crosses that, we get more mixed markets. For the S fund, this chart looks a lot worse, guys. So for the S fund, as you can see, we were in this tight trend line since July, moving up. And then on that price action at the beginning of September really kicked down here. Here's where we sold our markets, right about here, which is really good for our S fund, right before the drop. So we did a great job on Top Notch selling at that time. No one ever gets it right, but we felt really good about our sell right there, getting back into the G fund or cash. So we were really happy with that. This market on Thursday and Friday jumped below its trend line, and it's a filled bar. Usually filled bars are more bearish than anything else. So that is interesting for our candlestick perspective. And we also have 2 giant gaps here. Wouldn't be surprised if we saw these get filled since the trend lines are now gone for the S fund. We'll be paying very close attention to this fund moving forward. as far as EFA goes, a lot of consolidation here. Really interesting. And it did fill a gap, which we did have a gap in here. It was filled. That is a good thing. But we have these trend lines still way down here. Still not very confident with that. Our moving averages are in the right direction. Here's the 50-day moving average. Here's the 200-day moving average. Gap filled here, but just not as well-performing chart as some of our other charts. As you can see here, the C fund is still down 5% for the year, guys. So not the best chart to be involved in. We've been very cautious to be in the I fund, or I'm sorry, yeah, the I fund or EFA. I apologize. I might have said the C fund. EFA or the I fund is just not really a good place to be with our money as we are looking forward into the future. We'll look at it on a technical analysis, though, to be sure. And then finally, a real interesting note here, the VIX really picked up here. Look at this. The VIX was down for most of August, and then in September it started to tick up ever so slightly. We were watching that a little bit. We sold all of our funds right here, and sure enough, had a volatility spike way above the 200-day moving average here. The last time we saw it get above that high was back in June. So very interesting to see where this will go. Hopefully it simmers down a little bit. We'll have to wait and see where that goes. And of course, the last fund we have on here is the F fund or AGG. Had a kind of a bullish, or it was a bearish flag here, which was this flag right here. That broke down, and then once it broke down, it started to rally again back up here. And as you can see, the 20-day moving average was broke. It went down to that 50-day moving average. It was kind of bouncing on that, and now it looks like it's headed back up towards the top. But we'll look at it from a weekly analysis moving forward. Let's take a look at Grow Our Thrift Savings Plan. On this plan, we'd like to just see some indicators that he has from some technical analysis perspective. So this is the daily chart for the S&P 500 IVV or the C fund. He had a reversal here above 3,400. What will we see in the future? As you can see, this was the prior top back here in March. All right, February-March time frame. So we saw that prior top. We were able to close above that. Now the candlestick did go below that, but then it came back above. So that is a positive thing for charts for us. That is a really positive. We want to make sure we watch this, make sure it stays above that level moving forward. Here's some real interesting indicators though. It's RSI. Usually when RSI is above here, that's usually overbought. We tend to want to watch our charts hit way down below here, back towards the middle of the channel. Probably would be a good time to get back involved in stocks as long as we stay in the middle here. But as you can see, our indicator for MACD is rolling over as well. That's where the black line is going to go below the red line. When that happens, typically price moves down. So that's very interesting. I think it will stay above that that indicator here, but we'll have to wait and see and look at our technical analysis in the future. How does the S fund look? The S fund also very interesting. They had a double top at 1,600 here with the charts back in February-March time frame. We did go close below that top. Now we'll have to wait and see how far that goes down. It could be a failed breakout there, which would be interesting. Coming back to that 50-day moving average, touched it and moved back up. Have to wait and see where that goes from here. RSI really decreased here, which is all right. And then our indicators did roll over a little bit moving forward. EFA, same kind of deal. We never did make it back to that high top here, which made us cautious. Saw a reversal at the 50-day moving average. Have to wait and see where that goes moving forward. Indicators are turning down, but they are not significant. And then that's pretty much all we had for this week for that. Let's move into our technical analysis. So for IVV, what do we have? This is the C fund. Ever since March, guys, really has seen a beautiful just a rise in this chart here. Wasn't really a V formation comeback, but pretty close. I mean, it was a very, very nice rally for the last. We've had positive gains now for 1, 2, 3, 4, 5 months now. That's pretty incredible. We ended up selling right here on the bubble, which was great, and then September happened. So we have that hit right there. We finally have one of these trend lines drawn kind of in here. I don't like this trend line where it's drawn because we have a top there still. We'll have to see where the bottom trend line will be drawn in here for FinViz. Our moving averages are all in the right direction, 200-day, 50-day, and our 20-day moving average sitting on that 20-day moving average. Going to see if we don't get down to that 50-day for a bounce. We'll have to wait and see for IVV. Let's take a look at our charts for our technical analysis for IVV. We like to look at short-term and long-term charts. The two indicators we like to look at is the derivative oscillator and the price percentage oscillator. Derivative oscillator is these green lines here, and the red bars are green bars and red bars here. When the green bars are going up, price is going up. This is price here. When green bars drop, price is going down, or when it gets in the red here, price is going down. When it comes back up, tends to go back up as well. So that's our derivative oscillator, so keep that in mind. The other thing we like to look at is the price percentage oscillator. Price percentage oscillator, the thing we like to look at there is this blue line here. When it's above the red, price tends to move up, and when it's below the red, price tends to move down. All right, so those are the two indicators we like to look at on the Top Notch channel. Please write in the comments below if you have any questions about those. Really interesting things here on IVV long-term charts that we were seeing for our long-term signals. Look at this, guys. We had a fake out here with our derivative oscillator, these green bars here. Saw them start to slowly move up. Usually we see it go, when we saw it start to move up here, it was the first one here, for about 5 bars, 3 to 5 bars. We saw 1, 2, 3, 4, 5 bars exactly. And then it started to drop off again. Look at that. We went from 5.0 to 4.6. So a big drop there on the weekly derivative oscillator. That is trouble, guys. That's not something we like to see. Now, when we dropped off here last time, price did very minor damage, 2 weeks kind of down weeks, and then continued upward, kind of ignoring this oscillator, which was really interesting. We want to be very cautious with this. We'll be watching it closely. The last time we saw it drop was back here in March, and we got in a little too soon. We ended up taking a brunt of the losses, so we want to be careful with that. We are beating all markets, so we are ahead of markets. So we have the gain on months. We have the jump on the markets for right now, and we also have 2 moves for the month of September to mess around with. So we like to try and move about middle of the month, kind of see where that will help us out moving forward. On a short-term basis for charts, where do they look? So this is a short-term basis chart, same indicators. Where are we sitting? As you can see, we were headed down here towards the end of August. Decided to jump out here towards the end of August since we had one move, and it ended up looking like it was going to be a bad move here. The oscillator started to pick back up again. The price percentage oscillator, that blue line was coming back away from the red line, and we were almost second or third. We were thinking about jumping in, and luckily we did not. And when we did not jump in, sure enough, we saw a cross here with our derivative oscillator, and with our derivative oscillator went negative here, and our price percentage oscillator, that blue line, went above that red line. Sure enough, price reacted pretty negatively. Look at that. Big decrease here. Gonna wait and see where this pops back up. Need to see some positivity out of this chart before we get back involved with IVV. Overall, we're just staying away from this fund a little bit until we can get a better picture on it. Moving forward to VXF. All right, VXF, where do we sit at? As you can see, VXF has this trend line drawn in here. Don't really like that. They got a trend line drawn in here. Don't really like that one either. VXS also, we sold right around here, which was a great place to sell. Then markets really took off down here. Look at that. Look at that big default right here. It looks a lot like back here in March. Kind of scary looking. It did touch the 50-day moving average, so that could be a bounce there, but we'll have to wait and see. We don't have any trend lines drawn in here, so it'd be interesting to see where this goes from here. On a chart perspective, let's take a look at it. Long-term charts, we have the same indicators. We look at short and long. Same indicators here. Ooh, look at that. Our derivative oscillator, that's that green bars here. We were moving up, doing really well here. 4.2 back in mid-August. 4.1, 4.4, and then a 3.7. Big drop there with our derivative oscillator. Now, our price percentage oscillator is still above that red line, but look at that. We have price here, red candlestick, a lot of indecision in here. Markets are not really sure where to go. We have an election coming up. We have a lot of gains here to digest. We saw this back here mid-June, and price just kept going up after that for quite some time. Now, if our short-term charts do support that, we'll stay involved in charts. But right now, with that drop there, we are out for right now. We'll have to wait and see where it goes on the short-term charts. Short-term charts, also big drop. As you can see, derivative oscillator moving way down. Green bars into red bars there. Price moving way down. Price percentage oscillator dropped right here. Boom, on the third. Drop below our average line there. Blue below red. Not our two indicators say not a time to buy. We'll have to wait till this comes back a little bit before we can get involved in this chart. So we're going to be patient, and we're going to hold off until we see this start to come back before we start buying back into the market, if that makes sense. Moving forward into the next chart. EFA, International Markets, iFund, where are we sitting? Look at all this consolidation in here, guys. Seeing a lot of consolidation around the $64 mark. All right, we touched it back here in June, and then moving forward, it's just been playing around that line for a long time. We're bumping up against our moving averages now. We are below our 20-day moving average, hitting that 50-day moving average, and the 200-day is flat, guys. It's not pointed up like some of these other charts. As you can see, it looks pointed up here for VXF, IVV pointed up. On EFA, not the case, kind of sloped downward still. Not a bullish sign for EFA or international markets. Where do we look on a technical analysis for EFA? EFA, long-term chart, same indicator, same things we like to look at. Another really interesting thing here, guys. Derivative oscillator right here started to move up towards the mid-August, August 1st time frame. Moved up here to 2.9, 2.8. It moved back down. Then we're 2.9 again, and now we're back at 2.5. So this thing has just been teeter-tottering back and forth. The only thing that's different now is we had an indecision candlestick right here. That's usually the market participants, people in the market saying, I don't know what's next for this fund. We saw that back here in July, and markets moved up a little bit, which was good, but we have to keep that in mind moving forward. What does it look like on the short-term basis? Short-term basis for EFA does not look good. Like our other charts here, we saw a buy-in point right here for EFA. We almost took the bait for it, and then the same day it started going back down again. Our oscillator, our price percentage oscillator moved right below our moving average again. Price reacted quite significantly, and our derivative oscillator only one green bar before it started moving back down into the red. So very just no buy-in point right now for EFA or the I fund moving forward. Let's look at the last fund, bonds, the best performing fund throughout most of the year. How is this doing? How does AGG look, the F fund? Well, AGG hit a double top back here in the beginning of August, and ever since it hit that double top, it has not been doing well, guys. It's been consolidating quite significantly. The 20-day moving average moved below the 50-day moving average. Price has not been able to get above that 50-day moving average. The next leg down for this chart would be the 200-day moving average. So that is not a positive sign for charts or what this looks like on this chart. How about a technical analysis? Long-term charts, AGG, where do we sit? How do we look? Moving forward, as you can see, this chart has already rolled over quite significantly. We saw it roll over mid-August and then go into the red here. We're looking at 1, 2, 3, 4, 5 weeks of negative movement here on AGG. Bollinger Bands are getting really close. That usually means there's a big move coming up. We saw that back here. As you can see, towards back here, we saw the Bollinger Band start to close in, and then we saw a couple weeks later some big price movement in here. With charts being down, derivative oscillator in the red, we don't really want to be involved with this chart. PPO line is also below the moving average. Not a good sign for these charts. 2 signs down, 2 for 2 for our charts. We'll be watching this closely, but we're not going to get involved in it. That's primarily why we took our funds, basically, we didn't move them to the F fund, we moved them to the G fund. On a short-term basis for AGG, where do we look? Not good, guys. Derivative oscillator is moving down. Look at those green bars moving down, price moving down. Price percentage oscillator getting very close to that red line. We'll definitely see a cross this week, most likely, and if it crosses, that's a bearish sign for AGG moving forward. That's all of our charts this week, guys. Really appreciate you tuning in. Please like, subscribe, or share. As always, where do we sit on the Top Notch channel? Like I mentioned, we're sitting up 8.4% for the year. That is above all markets. We are beating all funds for the year. We are beating markets. We are beating the S&P 500. We are a whole percent above the highest performing fund for the year, which is 7.4. We're sitting at 8.4, so we're a whole percent above that. Really happy for where we sit. Where are we in our allocations? Well, as you can see here, we're sitting 100% in the G fund, waiting for those short-term charts to move back positive before we get back into charts. And we are sitting with 2 moves for September for those TSP investors. If you're in Roth IRA brokerage accounts, you can have as many moves as you want. But yeah, we have 2 moves. Excited for the rest of this month. Excited where we're going. Excited to be beating markets. Thanks for tuning in, guys. That's another top-notch video. We'll see you guys next time.